This is the Market Wrap. I am Agam Vakil. Well, Nifty is marking the third straight day of losses right now. But the positive is that after a sharp drop, we've seen some amount of recovery on an intraday basis. For now, the Nifty is just shy of the 12,000 mark. We do have about 0.5% cut coming in. And Coal India, Z Entertainment and BPCL among the three counters which did advance by over 2%. But on the losing end, we have Bharti Infratel, which is down 11%. A lot of shorts in the futures and options space there. Yes Bank under pressure. Tata Motors, IndusInd Bank and Hindalco Industries also declining. IndusInd Bank, in fact, was at a 52-week low. In the broader markets, we have one gainer for two losers on the NSE 500. TV18 Broadcast along with Den Networks and Hathway doing well in today's day of trade. Credit Access, Grameen and Abbott India among others which are advancing. We have First Source Solutions, Genk, Kashmir Bank, and of course Edelweiss Financial Services also advancing. On the losing end, Vodafone Idea under tremendous pressure, down 12%, and now at the mark of 3 rupees a share. Sadbhav Engineering, Union Bank of India, and MDC all losing out in trade today. But let's get in our markets editor for his take on today's action. Neeraj, what are you making of today's day?
It looked very dull until the last half an hour.
Yeah, last half an hour, yes.
And that's where we saw a bit of a pickup.
Yeah.
Led predominantly by some of the banks. So SBI, ICICI and Kotak Bank were the three banks that led the bank Nifty higher and thereby the Nifty higher as well. So that was the slight change that we saw. I mean, a couple of other stocks also again, but it was largely these names which actually led this up move. Market breadth very poor. Even at the end of the trade, even after the clawback, it was still 2:1 in favor of the declines. And now we've seen more number of days in the last 10, at least I think 80% of the days that we've seen in the last 10, the broader markets have actually underperformed compared to the large caps. And that's a big reversal from what happened in January. So the question mark comes in about whether or not some of these broader market stocks can continue to rise or no. But I think our market is taking very, very specific bets. If we had seen in the second half of 2019, a rush for insurance and AMC companies. Right now, we're seeing a rush for some of the API-led and chemical companies as well, and those are doing well. So even on a day like this, we had an IL Chemicals, India Glycos, Navin Fluorine, Deepak Nitrite, etc. do very well. So that's a clutch of names that is gaining, and therefore the market is probably focusing in a small name, of course, focusing there. But today the volumes were high, and I'll be interested in seeing what the FI participation has looked like in the session today. Much higher volumes, I must say, both on the FNO side and on the cash side. So the institutional participation would be interesting to note today.
Well, fair enough, Neeraj. Thanks for that update there, and the perspective that, of course, Neeraj has given us about the fact that some of these pharma and the chemical companies are in focus, but we have to talk about the big deal that came through post-market hours yesterday, and that is Reliance and Industries consolidating its media business. Neeraj, what have you made of that consolidation right now?
So, Agam, I think the moves today take out the arbitrage.
Right.
So that is part one. Yesterday, there was an arbitrage for both Hathway and TV18.
Oh, TV18.
Yeah. Den was flattish, but for TV18 and Hathway, there was an arbitrage. Now, with TV18 broadcast moving up 15%, and we don't have Hathway here, but Hathway was up 20%.
Right.
And Network 18, by the way, has moved up 5%. So now, you would reckon that if Network 18 were to continue moving higher, then these stocks, both Hathway, Den, and all the three, will essentially proportionately move higher because now the arbitrage is gone.
Right.
So the question that people would ask that whether Network 18 as a stock can gain. Now, difficult to call it. Media businesses by and large, as Z, Sun, even ENL on the radio business has shown that it's not exactly hunky-dory right now as far as the business goes. But you've got to keep in mind that Network 18 hitherto has always suffered from this discount that comes in because of the holding company.
Right.
Now that it ceases to be a holding company and the broadcast business is housed in it, does the market in its wisdom believe that the holding company discount going away could lead to some more gains?
Right.
That's the question, the answer of which we'll know in the next few days. So keep in mind, I think the other three will now proportionately, to my mind, move up proportionately to what Network 18 and the stock does over the course of the next few days.
Okay, well, we watch out for that. Thanks, Neeraj, for that perspective there as far as the big mergers is of the Reliance Industries businesses, media business is concerned. But let's talk about two other stocks which have made Sharad Dubey's radar today. Sharat, what do you have for us?
Well, the first stock is Huhtamaki PPL. The stock was up almost 9% today, and this is like, coming with its strong earnings. Strong earnings was aided by a tax reversal of almost 32 crore rupees, which aided the profit numbers. Now, if you go through the numbers, the revenue did increase by 10%, coming in at almost 673 crore rupees, and the net profit almost grew by fourfold to almost coming in at almost 68 crore rupees. The margins did see a contraction of almost 100 basis points, coming in at 9.9% due to rise in raw material cost itself. But if we see today the stock reaction itself, the numbers came in post-market hours yesterday. It opened up with a gap up, and going above all three key moving averages of 50, 100 and 200 day, and settling the day, being high as 9% today and settling the day at 276 rupees. Even the volumes are very high, as high as 2.5 years. This is the biggest volume jumps we could see in the last 2.5 years as such. So that is something which we'll be watching out for. The next stock would be Jsw Energies Acquisition. So Jsw Energy itself rose as high as 6% today before settling in the stock, around 3 to 3.5% mark. Basically, the company has signed a share purchase agreement to acquire GMR Group's Kamal Ganga energy plant, which is a coal thermal plant in Odisha, for an enterprise value of almost 5,321 crore rupees, out of which almost 4,000 crore will be actually a taker of debt, and the remaining 1,370 crore will be a cash consideration. Apart from this, the total installed power generation capacity will increase, of the company by almost 37%, coming in at almost 5,609 megawatt. Now, that is something interesting which we have pulled out is GMR's debt levels. The debt levels did see an uptick, in the last 3 years, and that stands at roughly almost 27,600 crore rupees as per FY19. So this move will actually reduce the debt by almost 4,000 crore rupees. So that will come, so roughly the debt levels at a consolidated stage will be almost 23,000 crore rupees. Still a long way to go for GMR's debt impairment plans, as we had discussed with them earlier. But the brokerages did come out with their report on this acquisition, and they did tell that this is value accretive, and the ROE expansion is expected between 16 to 20% for Jsw Energy, and the EBITDA increase is expected to be roughly between 900 to 1,500 crore rupees. So post this transaction, the EV EBITDA multiple will trade between 5 to 9.5 as stated by the management. So Agam, so this was the orders happening today.
All right, thanks Sharat for those updates. So, well, two other stocks in focus in today's day of trade, but plenty more lined up. That's a wrap on the markets, but lots more coming up. Stay tuned to BloombergQuint and we'll keep bringing you more.